Hello dear traders, I'm Maria Stardup and this is the review of crypto analytics from fx.co. It's the 19th of January today, Thursday, and now today's review. The US is creating a committee on digital assets. Meanwhile, Bitcoin is hovering around the 21,000 level. Why is that and what to expect from the flagship cryptocurrency next? And we will say a couple of words about Ethereum. Let's start. We will start with an article by Jakub Novak and the news. Today, the news from the US, where the US Congress has established its first ever subcommittee on digital assets within the scope of the House of Representatives Committee on Financial Services. It will be led by a former banker and Congressman French Hill. He stated that we want to develop a regulatory framework for digital assets that will make America a leader in terms of innovation, but also protect consumers and investors. As it turned out, the new subcommittee's duties consist of pretty commonplace items. In addition to developing clear guidelines for behavior in the ecosystem of digital assets, regulations promoting financial innovations with a wider social impact will also be developed. Compiling best practices that will improve the inclusion of digital assets is another duty for the panel. And French Hill also added that if the US wants to be a leader in this field, a regulatory framework for digital assets, including digital payments, must be promptly developed. Okay. And here in this article, we will take some information about Ethereum. So, Jakub writes that Ether buyers are focusing on the breakdown of the nearest resistance level at 1,600, and this is going to be sufficient to establish a foothold at the current highs and keep the bullish trend going. Additionally, this will have a huge impact on the market and halt the bearish wave. If the price fixes above this level, the balance will be returned to Ether with a maximum increase of 1,690 possible and the 1,780 region will be a further aim. However, if 1,500 support is broken, the 1,410 level, which was just formed, will come into play. If even it is broken, the trading instrument will rise to a minimum of 1,320 and probably below 1,260, which will be extremely difficult for Ether owners. Okay, let's have a look at the chart of Ethereum for a moment. It's the 19th of January today, and what do we see? Ether opened today at 1,515, and now it is trading at 1,527. So what can we say? It fell far from that resistance level 1,600, and it's even close to its support 1,500. So probably it will continue declining, according to Jakub. And now let's get to Bitcoin and the article by Artem Petrenko. So what's happening with the flagship cryptocurrency? after a powerful previous week, Bitcoin is taking a pause in its bullish rally. The cryptocurrency successfully reached and consolidated above the 21,000 level. At the same time, during the whole week, the asset is constantly facing sellers' pressure, which is one of the reasons for this pause. Apart from that, the need for consolidation is due to the continuous upward movement of the asset price for 2 weeks. Bitcoin is consolidating above 21,000 to avoid overheating. Moreover, there is rise in bearish volumes, which is also an important reason for the pause in the bullish trend. And this is confirmed by data from Into the Block, which notes that about 57% of traders of the largest crypto exchange have opened short positions in relation to Bitcoin. Another reason for the price consolidation was the cryptocurrency's network performance and the improvement in the state of affairs of the miners. And according to Glassnode, the price has once again risen above the average aggregate break-even for miners, and moreover, sentiment experts note that take-profit sentiment has increased significantly among Bitcoin investors. As for its correlation with S&P, the upward movement of S&P and the local bullish trend of the stock market have become one of the key reasons for growth of the cryptocurrency market. However, they can also cause a downward movement in the form of local correction. And as of yesterday, the article was written yesterday, the S&P 500 index is near 3,900 key resistance zone. The asset is unsuccessfully trying to break through this boundary, which may eventually serve as the starting point for a price correction and entail Bitcoin. As for Bitcoin itself, let's have a look at the chart. It has formed two uncertain candles over the past 3 days, and the current trading session may become the next stage to struggle between bulls and bears for 21,000 level. And let me remind you that the article was written yesterday. Probably the situation has changed already. The technical metrics of Bitcoin remain in the overbought zone but are moving flat. The MACD indicator became the third key indicator which left the green zone and rose in the overbought zone. As a result, we see a consolidation movement which may lead to a local correction. So Bitcoin has approached a key resistance zone both technically and psychologically. So, as a result, Artem says that most likely we are waiting for a local correction of Bitcoin, which will happen for one of many reasons or for all at once. Given the change in market sentiment, the correction will be shallow, especially if the market defends key support zones. The initial targets for the downside movement of Bitcoin should be the 20,000 level. This is a key trading and psychological level of the cryptocurrency. If it's maintained, Bitcoin will quickly resume growth. However, with a deeper correction, the price could head for a test of 19,400 level and lower to 18,500 area. Okay, let's have a look at the chart of Bitcoin for the moment. What do we see? Yesterday, about midday, Bitcoin went lower than that very important level, 21,000. It went lower and then it corrected a little. It opened today at point 20,721 and now it is trading at 20,818. So far, according to Artem's opinion, this is a sort of correction, and Bitcoin is really far from that very important psychological level 20,000. So probably it's something what was needed to resume its growth. We will see. Okay, and this is all for today. We will see each other in our next review tomorrow. As usual, I wish you profitable trading, fantastic day, and see you soon.